It's Thursday, October 28th, 2021. And today we're talking about OnDeck launching a $100 million US accelerator. Hopper continues its transformation by acquiring PlacePass. IPO Canada, Sharethrough, Magnet Forensics, Hootsuite, Propel, D2L, and Q4. And in the lightning takes, Calendarhero acquired by Vendasta, Fellow raises 24 million US, and CCI is launching some board training. Let's get started. First up, OnDeck is launching a $100 million USD accelerator. Alex, tell us about what's going on here.
Well, OnDeck, the Silicon Valley startup building the next Stanford announced ODX, a new accelerator. But instead of me trying to explain what OnDeck is and what this accelerator is, we've got Yash, who runs Canada for OnDeck. Yash, join us up here.
Awesome. Thanks, Jason. Thanks, Alex. Great to be here. OnDeck launched a $100 million US fund, global company. I thought it'd be helpful to give a bit of context on what OnDeck is and how this all came about.
Let's do it.
We've been around since 2016. Started as a dinner series, really.
Yash.
Hello.
You're doing great, Yash. Keep it up.
Okay. It started as a dinner series in 2016 for people that were literally on deck to meet each other and start companies together. When COVID hit in 2020, we went to virtual cohorts, and OnDeck really is meant as a career accelerator, but also a startup accelerator. So our mission is to expand the startup economy. We think startups are the best vehicles for affecting change in the world. And we've been running these fellowships for the last 2 years for founders to start companies, to join companies, but also to accelerate their careers in companies.
Now, there's a lot of programming for entrepreneurs and startups and leaders at this stage. What's really unique about the OnDeck program?
Yeah, what really sets OnDeck apart is that we find the best talent internationally, and we bring them into these cohorts. We just announced ODX, which is a $100 million fund. We invest $125,000 for 7%. But we really invest in the individual rather than the company. So we're taking bets really early on people who have conviction to start something. And we're saying, come in and build it at OnDeck. Meet your founders, meet your co-founders, find your customers, meet your investors. So we're betting very early.
And so you're betting really early. And what's the bet? So what are you investing? What does the company get? What do you get?
Sure. So we're looking for founders who have conviction on what they want to build. So they'll come to us and say, hey, this is my idea. This is what I want to run with. We'll say, here you go. Is $125,000 US for 7% of the company. We'll match you up with a build partner who works with you one-on-one for 3 months to help you really accelerate and grow the company. It's a customized program, so we're not, fixing you to a set demo day or anything like that. We're really customizing the program with you based on what sector you're building in, based on whether your needs are fundraising, finding a co-founder, or acquiring customers.
So when you're looking for a founder that has conviction, what are you looking for in a founder, and what does conviction look like?
Yeah, we're looking for founders who one, understand the space deeply and who have some unique insights into what they're building. We're looking for people who are jumping into it full time and are really giving all their time to what they're building. If they're part-time, if they're still thinking about what to build, we have a program called ODF for them. So they come in, we give them a handshake agreement. We don't charge for the program. So they can come into ODF, explore, build conviction, and when they're ready, then we send them the funds for exchange of equity.
So just talk about that ODF program. It sounds like that's the runway grants, because I read about in your news, like, hey, you got the 125 for 7%, but you have this runway grant of $25K for 3 to 6 months.
Yeah, so one of the things that betting on the individual, sometimes people don't have the personal runway to leave a job or to fully commit to what they're building next. So we'll say, come and join ODF. We'll give you $25,000 as a grant initially, and you could be anywhere in the world and joining this. You can come in, so that'll give you the personal runway to really build conviction and explore and work on this full time. And when you're ready to incorporate, then we'll release the rest of the $100,000.
So it's 125 in total.
125 in total, 25 upfront as a grant. If you end up coming in and exploring and not building anything, and that's fine, it's a grant that we gave you. If you don't get to full conviction and you don't end up starting a company, that's okay too. But we hope that by working with you, we can really help you take that leap and start companies. Ultimately, we think that more people should be getting off the sidelines and building companies, and we want to reduce the barrier for that.
Cool. So Yash, I have to bring up some Canadian content here. We are TechTO. We're focused in Canada.
Of course.
So 2 questions. One is, you're the head of Canada. So what does that mean? And 2, I saw you tweet that you already had some Canadians in the ODX program already. So love to know what's going on. What do you do, and what's going on in Canada with this program?
Yeah, I mean, I'm a founder. I spent the last 10 years before joining OnDeck building startups in Canada, and I actually joined OnDeck as a fellow before joining the team, because I wanted to explore ideas for the next company that I had. Ultimately, decided to join the team because I thought it's one of the best vehicles that I can help with growing the Canadian ecosystem. Increasing access to capital and to talent, globally. As head of Canada, my role is to help create more Canadian founders, to help them get easier access to funding at better terms, and to help them recruit top talent. So my role is really to grow the Canadian tech ecosystem, and in exchange, but by virtue of doing that, also grow OnDeck. So it's a really fun role to be in.
Yeah.
In the last couple of weeks, OnDeck has invested in 5 Canadian founders. 3 of them we invested in directly out of what we used to do, which was the Runway Fund. We don't do that anymore. So that was 2 weeks ago. And then when we launched ODX, which is our accelerator, we've backed 2 Canadian founders out of the 8 that we've backed in the last week. So about a quarter of ODX has been Canadian so far.
So, and we expect that ratio to increase, right?
I think what we're seeing is that on ODX will be about 50% international, which is amazing. Typically our programs have been about 30% international, but right now we're trending higher on the international side for ODX.
Cool. And last question I have for you: you get the money, and OnDeck is a bit of a community in courses. So what else do you get from OnDeck as part of this investment?
Yeah, so in ODX, there's the capital. You get direct access to what's called a build partner, and a build partner meets with you once a week, one-on-one, and really creates a plan for you for getting to your next funding round, getting your founding team together, getting your initial customers. So that's a one-on-one relationship. The build partner is an expert in early stage company formation, and it helps connect you with the broader OnDeck ecosystem. That ecosystem includes some of our partners, some of the top experts that you might need access to, but we help connect you with the network of networks within OnDeck. So we have about 20 other programs at OnDeck, anywhere from OnDeck for professionals, so for designers, engineers, marketers, chief of staff, but also we have OnDeck for angels. So we help connect you to those different networks.
So basically you get a guide to get you through the OnDeck community.
Yeah, and then through the broader network and community, you can find investment and customers. Exactly.
Cool. Yash, thank you so much. Thanks for explaining the ODX program to us, and thank you for joining us all the way from small town BC. What island are you on again?
I'm on Salt Spring Island.
Salt Spring Island.
That's right.
What's the population?
10,000 year round and about 30,000 in the summers. So pretty quiet these days.
Yeah. So a bit smaller than Toronto.
Yes.
Thanks.
Thanks so much for having me, Alex.
Thanks, Yash. Oh.
Wow, that's a lot of OnDeck. Wow, thanks, Yash. It was amazing. Alex, I got to ask, with all the different programs that OnDeck is running, why is this so interesting to the TechTO community? Like, why should founders and entrepreneurs who are listening and watching right now pay attention to specifically this accelerator announcement?
Yeah, so specifically with the accelerator announcement, I think it's just a reminder that the barriers to starting a tech startup keep on falling. And one of the arguments about high valuations right now is just there's not enough startup founders. And so this is another program to take those barriers even lower and get more people starting companies. So, it's an interesting program because it's giving you money before you really have a company. versus YC, where you need to already have a team and a company, and you get the same valuation. So my view is, if you're someone that wants to start a business, there is a plethora of programs, and there's no one that's right or wrong. You should find the one that's right for you. So for example, if you're in Canada, you now have Entrepreneurs First, Next Canada, Antler, and ODX. All of them offer something different, but they generally give you money to get started and figure out what you want to build. Then, if you have an idea and a team, you can go to CDL for mentorship, or you can go for YC for accelerator. And there's probably 25 to 50 accelerators between Techstars and Forum and stuff that Mars runs and stuff that BCIT run. And, so there's tons of programs there. And then you have venture funds that are focused on bringing community to you that are early stage. So
there's a lot of options.
Yeah, there's a lot of options. No excuses anymore. Find a program for you and start.
Okay, so Alex, with all these options, how are people supposed to keep up to date on all the different programs and learn more about the leaders like Yash that are shaping the Canadian tech scene?
I think they should subscribe to the TechTO email.
They must subscribe to the TechTO newsletter. Alex, what can subscribers expect in tomorrow's edition?
Well, every Friday we have my favorite reads. We started adding on information on a new potential source of capital. So we highlight some new VCs or some angels. So if you're looking for financing and you're past ODX stage or past the CDL stage, and you're trying to figure out who's out there you've never heard of, we may be featuring someone tomorrow. You may want to connect with.
Do you know who's going to be featured tomorrow?
No,
on the
because
capital side?
There's so many people that we have profiles that we're working with. I'm not sure which one the team has chosen.
It's going to be a surprise for you. It's going to be a surprise for the 60,000 Canadians receiving it in their inbox tomorrow morning. Next up, Hopper continues its transformation by acquiring PlacePass. What's going on here, Alex?
So first of all, I want a bit of editorial. There was so much news over the last 10 days. This was a very easy piece of news to pass over. Montreal-based Hopper acquired Boston-based PlacePass. It's a 12-person team. Will be joining Hopper along with PlacePass's products and partnerships.
Very nice. And so, who's PlacePass?
Well, other than being a name hard for a tongue twister, PlacePass is a tool that allows hotels, airlines, and vacation rental companies to offer destination experiences. So, you go to a hotel and you want to go, explore if you're in Hawaii and you want to explore, a volcano and you need a program, PlacePass enables a hotel to offer different people that can take you there. They have about 300,000 experiences and 800 global destinations on their platform.
And why does Hopper make this acquisition?
Well, I think you have to take a step back and understand what Hopper is building, because I think you get snippets of it, but they've built in a very interesting and I think unique flywheel in the travel space. They have a consumer app which they use to test their own new products. Then they've invented a suite of new products that aren't normal, weren't in the travel industry before, like fintech products. They test those products on their consumer base. Then they make those available to third parties and then get distribution partnerships to get these products out to many people. So you see, get the consumer app used, add new products, which makes the consumer app cool, take those products and get them out to B2B to make more money, get you more volume, and then get new products for consumers. So when you look at the PlacePass, it fits in this flywheel in several ways. First, Hopper's consumer-facing app is now being downloaded about 64 million times and offers flights, hotels, and cars. You know what they're missing? Experiences. PlacePass gives them the vacation experiences. Second of all, Hopper can then offer through their cloud and through their distribution partners, so Amadeus and Sabre and Travelport, get more volume for the people that are offering those experiences in their PlacePass. So it makes a consumer product more interesting, and it makes PlacePass more interesting to potential suppliers because they have much wider distribution than their consumer product.
Wow, this could be the best Hopper strategy teardown that's ever been published publicly.
I was looking for one, and I don't think anyone's ever done a strategy, and I think it would be interesting for us to write one.
Yeah, I think it'd be super cool. I mean, I'm curious if someone from Hopper is watching. Let us know how close we are. I think this is pretty good, though. I think this is really good stuff. And if you're watching right now, you're part of the tech ecosystem, you're excited about building your own company, you're excited about joining a rocket ship, why are you paying attention to this acquisition?
Well, it goes back to, I think there's a few things that are not well understood by Hopper that you should think about. First of all, Hopper's viewed as a consumer travel company, but they've undergone a very large transformation. They that's largely being ignored in this interesting strategy. First, they became a fintech player, right? So they introduced a bunch of fintech products that you can do price prediction, price freeze, cancel, insurance basically cancel for any reason, flight disruption guarantee, which they tested on consumers, got working, proved economics, and then basically sold as a B2B company through the Hopper Cloud. So now you're monetizing something with your consumers, but now you're saying, hey, this works. And we have no problem giving to our potential competitors to actually make, because we're going to make money off each transaction. We're better off doing that. So the takeaway is, if you develop a unique product for your consumers, look at other ways to monetize it, and don't be worried about giving it to your competition if you make enough money. Second of all, they understand the importance of distribution. They've got 70 million consumers, but they've now plugged into Amadeus and Sabre, which gives them access to billions of consumers, which, again, if you have a product that's working there, it can work through those people, even though you make smaller margin. This goes right to the bottom line. Scale is so important, and flywheels produce exponential growth at the end. And then finally, every company either becomes a fintech company or a messaging app at one point. So if any company you're looking at, expecting to either offer a messaging platform or a fintech product by the time they scale.
Amazing. I love it. By the way, I think a couple of those insights are, the last one is, I have common knowledge now, but I think the embracing your competitors is a really interesting one, and one that a lot of people don't think about. But when you grow the pie, it works for everybody. Alex, I got to ask you, if you love the way that Frederick has been growing Hopper, and you love the way that they've been doing the fundraising, how are you supposed to grow the skills that you need to fundraise?
Become a TechTO insider.
Yeah, that's a great thing, because we're going to be featuring one of our TechTO insiders in perfecting the pitch. We're going to bring them into the stream to walk us through their pitch deck that they are using to raise money and get your unfiltered feedback. Do you have a promo card for this? Now would be a good time for it. If not, no big deal. Just come to learn how VCs think and what they look for in a pitch.
Well, almost every Friday, we're going to be doing either perfecting the pitch, or we're going to be walking through Founders and Funding, where you hear how VCs think, or we're going to someone who's raised money, and they'll walk us through their deck. So you can learn, we're covering every angle on learning how to fundraise. So
Finance Fridays. Finance Fridays. Head over to techto.org and grab your unique invite link to join Perfecting the Pitch. Next up, I love this. IPO Canada. What a week. Sharethrough, Magnet Forensics, Hootsuite, Propel, D2L, and Q4. We are not going to be able to do every single one in the depth that you would like to cover them, Alex, but why don't you give me a quick rundown on what you're seeing in the market right now?
Well, it's interesting. So I'll just give so one's raised successfully what they wanted them more, which was Sharethrough and Propel. They basically raised what they were going out to market and raised more. Magnet Forensics sees so much demand. They filed the ability, this what's called a shelf, and allows them to raise up to $1 billion via many different securities. And then you have Hootsuite, who's planning to raise 200 million, and DTL and Q4, who are raising or about to raise, and they've lowered the amount they're going to raise because of weak demand. So a lot of activity. Like, we should actually make this about the TSX, and maybe you want to look at them as for investment. This is not investment advice, but this is a lot of activity and the brokers around them. But it's interesting because it paints an interesting picture about the public markets, where you've had some super successful, some companies that have been on the sideline forever saying we're going to raise, and then some less successful raises.
So you've got 3 successes here, or maybe 2.5, and 3 or 2.5, maybe less successful ones. What's driving the different reactions to these listings? Is it industry? Is it management? What is it?
So it's interesting. The ones that are better known in the tech community and are a bit, let's call them long on the tooth for being private for a while, are the ones that are getting less demand. And, the other ones, so again, if you asked someone what Sharethrough was before talking about today or reading about their IPO, I'm sure most people in the tech ecosystem wouldn't know.
Right.
So I think what you're seeing is people are rushing the markets because the market has an insatiable appetite for new tech listings. But just because they want more tech listings doesn't mean they're going to just accept everything. So my guess is some of these ones that have been private a bit longer, have slower growth, they're getting less premium and less demand for them. And, Q4 is the most interesting one, because I'm starting to believe that the reason they pulled the initial IPO is not for what they said it was, and there was weak demand. Because I've never seen someone, pull a listing because of contract
The
negotiations.
Broadridge negotiation.
Yeah.
So which ones of these do you like? Which ones are you most excited about? And because as we know here at TechTO, the IPO is not the end, it's just the beginning of the journey,
Well,
another milestone of the journey for big tech in Canada. So who are you excited to be following on their launch here?
Well, again, I don't know which ones I like as investment. I haven't dug deep into their financials, their prospects. The one I'm actually most excited for to happen is Hootsuite.
Yeah.
I don't know if it'll be the best one, but I think it's like Vancouver's had a great run, but over the last little while with unicorns. But this is a reminder you have to get public. And Hootsuite is one of the early companies that made a name for Canada in the recent batch. It's just like at the forefront. It's out there with like FreshBooks and a few others, and just to see them get liquid and hopefully return money to its founders, to its investors, to its early employees and its angels, I think will be amazing news for this ecosystem.
I'm excited to see what kind of noise they're able to make on social media. They probably had this stuff queued up and ready to go for years, right?
Yeah, well, they were hoping for an acquisition last year, and that didn't happen, right? So again, I'll be interested to see how it's received, and it hopefully goes really well, because I think it's what I want everyone to win.
Yeah, we want everyone to win. I agree. I'm rooting for Clive, Sheldon, and Noah over at Propel. Really exciting fintech that been operating under the radar a bit in the TechTO community, but building some big stuff in the fintech world. Multiple brands, operating in the US. A lot of opportunity for them to thrive with an experienced management team like the one you got at Propel. They're in good shape. I bought some in the IPO too. Q4 also. All right. So anything else you want to talk about IPO Canada?
Well, maybe we should talk about the implications for people in the ecosystem.
Yeah, is the answer to still dream about building a public company, or to stop dreaming about building a public company?
Well, I think right now you're seeing the public market still has an appetite for technology. You've seen a lot of new funds being raised, like corporate funds, Spin Masters. Clio supposedly has a fund out. In a US target raised like $8 billion for its third fund of the year. So still valuations are good, still a good time to launch. Goes back to what we said earlier. There's never been a better time to launch. There's probably never been a better time to raise. Again, how are you seeing the reception? And what we said last week or 2 weeks ago, growth and strong fundamentals are still important. And the market, despite being very hot, is very picking where the valuations go. So you need to build a business that can grow, have momentum, and show that it has some fundamentals. And finally, with all these late stage companies going public, if you don't have that growth and you're sick of running your business, or there's going to be a lot of people that need to continue to grow or accelerate growth and have this nice currency that's liquid, it might be a good time to sell.
I love that. The deeper you get into the game, the more you just got to build a good business. And sometimes earlier in, it's about storytelling, and it's about unlocking some of that early stage capital. But public markets, story goes a long way, but only some.
Even in private markets, eventually the growth has to prove. Eventually, you have to prove you can make cash flow.
That's right. Now, if you want to join a community of Canadian tech founders who want to prove they can make cash flow, you got to check out the TechTO.org Insider Membership Program. Alex and I are there every single day answering your questions, making connections for you, and helping to grow your community. Alex, who have you met recently in the Insider program?
Jonathan Binus. He's actually based in Toronto, founder of Vivid Machines. I actually known him for a while. We met in person in Vancouver, of course. Not Toronto, but in Vancouver. He came to Tech Vancouver and got to learn a lot more about his story. It was a great time.
Very, very cool. Okay, now let's move on to the lightning round. We've got a lot of news to cover this week. First up, in acquisition, Calendarhero is acquired by Vendasta. What's going on here, Alex?
Basically what you said. Calendarhero, which used to be called Zoom.ai, got acquired by Vendasta, which had raised $120 million earlier this year. They're keeping the team. They're making Roy the head of the SMB division. So nice exit for Roy. Valuation wasn't disclosed, but I think it's probably better than I would normally think, because when I hear valuations not disclosed, I usually think it's an acqui-hire. But I think in this environment, they probably commanded more.
And why do you care about this one?
I think we're going to see a lot more of these in the next little while. It is impossible to hire. There's a lot of people raising money. A lot of people have to go raise a ton of people. And what better way to buy it than some company that's got like 15 great employees? I don't know what the exact numbers Calendarhero had. Acquire them, acquire the talent, pay a bit more to make the investors happy, make the team happy, give them good retention bonus. And I think we're going to see this increase substantially. I think it's been quiet over the last little while for, like, let's call it talent acquisitions. But I think in the environment right now, people are going to pay up for it.
All right, well, let's count them starting today. We're going to count the rest of the year how many talent acquisitions we talk about on Quick Takes. That's 1. Let's see if we can get to 10 by the end of the year. Next up, a fundraise. Fellow raises $24 million US. Tell me about this raise, Alex.
So Fellow raised $24 million, led by Crowd Ventures with participation from Inovia, Felicis, and Garage, who all previously invested. Fellow makes a software tool aimed at making meetings more productive. They claim to have 800 corporate customers. But, what's interesting here, this is basically incubated by a guy named Toby Luque. You may have heard of him.
Yeah, he's doing well in that previous business, right?
Oh, the one he's still running, Shopify, right? So the story here is Toby knew the founder, Aiden, who was looking to start something. And Toby said, why don't you try something that improves feedback and we'll be the first customer. So don't know if they put money in the initial round or what the deal was there. But then Shopify was the first customer. They did a tweet about it, which led to a lot more inbounds from other tech companies. And so this is very interesting. So Shopify is not only financing startups, but it looks like it's incubating startups right now. And it just shows the Shopify magic. They basically, look, I'm sure this company would have done well otherwise, but they probably accelerated where it was significantly.
I think it's awesome. Shopify says they support small businesses, and here they're putting their money where their mouth is. They've been supporting lots of Canadian tech companies for a long time and trying to make the next Shopifys out there. I love it. And this deal in particular, why do you like this?
Why do I like this? Fellow.
Yeah. Why do you like following Fellow?
Oh, I like the story that how Shopify financed it.
Love it. All right, last one in the lightning round, Alex. You ready?
Yeah.
It's a new program for Canadians. CCI is launching some board training.
Yeah.
Tell me about this one.
So CCI is the Council of Canadian Innovators. They've launched a program to train business people to be qualified directors and board members, with in particular eye in training at diversity candidates, I guess, for lack of a better word.
Mm-hmm. And why are you excited about this new training?
Well, tech has a diversity issue, let's call it, where it's not diverse enough. And part of the problem when you talk to people, say, oh, there's a pipeline issue. There's not enough qualified people. Well, CCI is taking action and training people to be board members. And so they're removing an excuse. So hopefully this helps get a more diverse and inclusive ecosystem.
I love it. Now, I know there was a lot more news this week. Are there any honorable mentions that you wanted to shout out?
Bridget raised $24 million from Camber Creek and Storm Ventures, great company out of Toronto Waterloo. Skyhive raised $40 million USD from Elridge and Allegis Cyber, among others. And then Fraction out of Vancouver raised $20 million from QED. Any of these could be our top headline any other week, but we're seeing as we get near the end of the year, lots of people getting deals done.
I love it. Why do you think that is?
Well, I think some of these were previously done and just weren't announced. And I think there's seasonality when deals get done. People will, especially if you got American VCs, you want to be in front of them before Thanksgiving, and then historically you still get the deals that close all the way through the end of the year, but it's usually not net new ones. Last year was a bit different because no one could go anywhere, but I think this year, especially with America being open more than Canada, there's going to be a lot of people trying to take vacations. So I think you'll see a rush of deals being announced between now and December 20th.
I love it. Well, then get your deals done, folks. What a week in Canadian tech. If you haven't already, you got to like and subscribe to TechTO wherever you're watching or listening, and we'll see you on the inside.
We're in the business of delivering impossible things. We're in the business of delivering things that nobody's ever seen before.
If you build that culture, you'll come up with really cool and innovative stuff, and literally could be in the next multi-billion-dollar idea. So this conversation is largely going to be about scaling yourself and scaling your leadership team.
I want to talk about one of the biggest struggles that I think a lot of startups face early on, which is building initial traction.